All right, welcome to the Explainer. Today, we're doing something a little different. We are going to pull back the curtain and really dissect a professional, real-world stock portfolio. We're going to look at the big wins, the painful losses, and figure out what lessons we can take away to build a smarter strategy for the year ahead.
Okay, so here's the game plan. We're going to start with the core investment philosophy, what really separates the pros from the pack. Then we'll get into the nitty-gritty and look at what happens when things go wrong, because that's where the best lessons are. After that, we'll see how that same philosophy helps you spot incredible winners. And finally, we'll look at a few ideas for where to find opportunities next. So what's the secret to long-term success in the market? Let me tell you, it's not about hot stock tips or some secret algorithm. It's about having a rock-solid philosophy that guides every single decision you make. This is the bedrock, so let's break it down. Okay, before we go any further, we have to get one thing straight, because it's a super common misconception. Investing and trading, they are not the same thing, not even close. In a lot of ways, they're polar opposites. Think about it like this. A trader is kind of like a surfer. They're trying to catch the perfect wave, a short-term market move, to get a quick thrill. An investor, though, is more like a farmer. They're carefully planting seeds in a good business and patiently waiting for them to grow over many years. One's a bet on momentum, the other's a disciplined strategy for building real wealth. And this, right here, is where the magic happens. Instead of just chasing stock prices up and down, smart investors focus on a company's intrinsic value. That's what the business itself is actually worth, based on all the cash it's going to generate in the future. It's like finding a Picasso at a garage sale, you know? You know what it's truly worth, even if the price tag says something else. That gap between the price you pay and the value you get, that's your margin of safety. And it is the key. All right, so we've got the philosophy down, but let's get real for a second. What happens when things go wrong? Because believe me, in investing, some of your most valuable lessons will come from your biggest losses. This is the stuff that really forges a seasoned investor. Okay, our first case study is a bit of a cautionary tale. It's an agricultural sciences company that was supposed to be a big turnaround story. The thesis was that it could push through its challenges, but well, the market wasn't buying it. And as we're about to see, the market had a point. Yeah, the stock just cratered, down a gut-wrenching 72%. So what on earth happened? This wasn't just a small miscalculation. It was a fundamental misreading of just how tough the market was. Let's unpack the mistakes so we don't have to repeat them. So basically, the company got hit by a perfect storm. First, its patents expired, which was way more damaging than expected. Then, a flood of generic competition came in and just crushed its pricing power. The company tried to cut costs, but it was just too little too late. The final nail in the coffin? A credit downgrade to Yunk. The market completely lost faith. All right, our next story takes us into the world of cold storage, where a simple miscalculation, a classic supply and demand problem, put the entire industry into a deep freeze. It's a textbook tale of boom and bust. So imagine this. The two biggest players in the industry thought the pandemic-era demand for frozen food was the new normal. So what did they do? They built a ton of new warehouses. But then, demand went down as inflation hit people's wallets. Now they're stuck with all this empty space, and they're in a price war just to get anyone to use it. It's a painful lesson in the dangers of getting too optimistic. So, okay, after all that doom and gloom, is there a silver lining? Absolutely, because in investing, today's disasters can become tomorrow's biggest winners. It all comes down to a simple idea. Everything has a price, and when a stock gets beaten down enough, it can become an incredible opportunity. Now, let's flip the script. We've talked about the losses. Now let's talk about how to turn all that market fear into huge wins. This is the art of being a contrarian, of buying when everyone else is selling. This is where fortunes are really made, so pay close attention. A great way to think about the stock market is like a giant pendulum. It's constantly swinging from extreme optimism, where everyone is euphoric, all the way over to extreme pessimism, where everyone is terrified. It's rarely sitting in the middle where things are rational. The key is to have the courage to buy when the pendulum is stuck on the side of fear. And Wayfair is a textbook example of this pendulum in action. During the pandemic, it was a market darling, right? The stock was wildly overvalued. Then the bubble burst, and the pendulum swung hard the other way. The stock got crushed. But for investors who saw the value, that was the perfect time to buy. And since then, the stock has tripled. It's just a powerful reminder that you buy when there's blood in the streets. All right, next up, a corporate giant that the market had pretty much written off. The narrative was that it was in trouble, that its best days were behind it. But as we're about to see, the reports of its death were greatly exaggerated. The market was just panicking. The headlines were screaming about antitrust lawsuits and how AI was going to completely destroy its core search business. But while everyone was freaking out, some investors looked past the noise. They saw that the business fundamentals were still rock solid and that AI wasn't a threat, it was actually a huge opportunity. And they were totally right. Okay, so what's the big takeaway from all of this? We've seen how a disciplined, value-focused philosophy can help you dodge disasters and spot amazing opportunities. Now let's put that knowledge to work and look at a couple areas that seem undervalued right now. First up, let's talk about a tech titan that's kind of been flying under the radar compared to some of the other AI darlings. While other names have been getting all the attention, this company has been quietly cementing its dominant position. And because its stock has lagged a bit, it could be a coiled spring.
The investment case here is just so compelling. You've got this incredible combination of steady, defensive businesses paired with these massive high-growth engines in Azure and AI. And yet, the stock still appears to be trading at a nice discount to what the business is actually worth. It really feels like the market isn't fully pricing in its long-term AI potential yet.
Okay, now for something completely different. Let's talk about a sector that everybody seems to hate right now: energy. The headlines are all about the shift to renewables, but the reality is the world is going to need oil and gas for a long, long time. And that pessimism has created some serious bargains.
This company is just a lean, mean cash flow machine. It's one of the lowest cost producers in the entire country, which means it can make good money even when oil prices are low. And if, or when, prices recover, the stock could really take off. It's a classic contrarian bet on a best-in-class operator that's on sale. And this really just brings it all home. This is the secret sauce. Whether it's a tech giant or an energy company, it all comes back to finding that margin of safety, that gap between the market price and the real intrinsic value of the business. It's that simple, and it's the key to building a portfolio that can truly stand the test of time. So as you look at your own investments, the question you've got to ask yourself is this: am I a trader or am I an investor? Am I just chasing headlines and hot stocks, or am I patiently buying pieces of great businesses at fair prices? The answer to that question, more than anything else, will likely determine your success in the long run. Thanks for watching.